Hi guys, Andy here. Let's have a look at the Dow Jones futures. For the record, today is Sunday, December 17th. Time is around 4:45 p.m. GMT. So here we are looking at a weekly chart, and my take on the Dow Jones is that from the March 2020 lows, we made a wave one up right here. We came down as a wave two, corrective structure A, B, C. So wave two of the higher degree was in right here. And last week we also got an additional indication that this is the case because we took out the high right here, which means that in the weekly the higher low sequence, so the bullish sequence is just continuing. And so that could mean that we are working here on the wave three in the higher degree. This becomes our target area. If we take the length of the wave one, the length of the wave two, then the area here between the 1 and the 1.618 FIB extension is our target area. Now, we don't have to go there in a straight line. We could go there in a straight line, but it is more likely to have something as 5 waves. And so I believe here we had our wave one. This was the wave two low, and we are now working on this wave three. If we take the length of this wave one, the length of this wave two, then here this area between the 1 and the 1.618 FIB extension becomes the area where our wave 3 is situated. So this is the target area for our wave 3. Now, as you can see, if we go to the daily, as you can see, I updated my chart here, this part, not that it is really important for our forecasting, but let me explain what I did and why. So this is rather something educational, I would say. So for some time, or since I think 1 or 2 weeks, I became quite convinced that this here was a significant low as we started like a new upward cycle from here. This was clear from our RSI analysis. And so the wave 2 low is in right here. And so if we look back at this structure, in my opinion, the count would be better to call for a running flat. So the wave one in right here. And then from this wave one, a running flat where our wave A happens in 3, 1, 2, 3, then an overshooting wave B, and then 5 waves down as a wave C, 1, 2, 3, 4, 5. If you follow me for a while, you know that when we were doing this structure right here, I was kind of struggling with it because I did not really like how this was ending. This was ending way too strong to end as an impulse or a diagonal. So that was a problem, and we also had a problem here with the subwaves, depending on which data source you took. Or wave 3 was slightly shorter or slightly not the shortest wave, and so we had some problems here. So now if we look back at it, of course afterwards it's always easier, then it's better to classify this, in my opinion, as running flat. So, and now you could ask, Andy, why are you changing your mind right now? Well, simply because we have more data, and like I said, afterwards it's always easier. And if you do forecasting, you always look for the obvious structures like an impulse, a zigzag, and a flat, I would say, and also a triple tree correction. A running flat is an exceptional structure, I would say. And like if we are somewhere here or here, you will not forecast a running flat, because there's an exceptional structure. And yeah, if you base your trading on structures that do not happen that often, then you will be more wrong than right. So therefore, I always try to look for obvious structures. But now it turned out that this here, the structure right here, is a running flat in my opinion, or it looks better like a running flat. So it is what it is. It happened, but actually it's not so important anymore for the future, because no matter what, I was seeing this here as a significant low. So if you would call here for a running flat, as this structure, or like I had before, a wave 1 right here and then a corrective structure down, if this is the wave 2, it is the wave 2, and only this is important for our forecasting. So let's say that this was rather educational. It's not so important for our forecasting, but now when we have more data, it simply looks better to classify this as a running flat, A, B, C. So if we then look into the future, like I told you, from here we started a new upward cycle. And so I just gave you the target area. If we take the length of the wave 1, the length of the wave 2, then this here becomes our target. And actually we are getting quite or we are getting closer, I would say. Now, I mean, if it is a wave 3, a wave 3 off 3, actually, remember also this area, it is of course possible that we do not respect this area. And so then we would have a count like this, where this is the wave 1, 2, and then 3, 4, 5. We can go beyond this area. However, if we do respect this area, it could be something like this, where we have our wave 1 here, wave 2, then 3, 4, 5. So this will, again, we will only know this afterwards. But the most important thing now to know is, or to analyze, or to classify, is to see this as an impulse. Like this also became quite clear recently. We now clearly have 5 waves in the daily. It looks very strong. And if we go to the 4 hour, then I would say here in the 4 hour, it still looks, with the data we have now, as an ending impulse. We have our 5 waves, 1, 2, 3, 4, 5, with our wave 3 here, the strongest RSI. We have some divergence here in our 5th wave. So therefore, it is an ending pattern. However, like I also told you in my previous videos, we also have to consider an alternative scenario, here indicated in red, in case we take out the RSI reading right here. If we take out the high right here, then it is more likely that this here was our wave 1, a very shallow wave 2 pullback, and that we actually then are working on the wave 3, here, the wave 3 in red. But so far, with the data we have right now, I would say this here is an ending structure. However, things will change once we take out the high right here, the RSI high right here. Then if we look at the 1 hour, then we pay attention, or we focus here on this last cycle, I would say, from here, from the wave 4 low. And so also here, this last cycle, like, the best way, or the nicest structure would be that we see one more high here, a 5th wave with divergence, because our wave 3 is situated here. But like, if you look good, we actually have um, another high with divergence. So it could be something like this here, actually, but I prefer to see this as the wave 3 of 3. So this would be my preferred count, like this, where a wave 5 with divergence will follow. But unfortunately, we cannot exclude this scenario, as we had a high with divergence. So it's a possibility that the high is located right here. But given the very bullish nature of this structure, I prefer to go for this discount, where the ending structures are really, really clear, and that would mean that we still need this fifth wave right here. Okay, that's my analysis for the Dow Jones. If you liked it, please like, subscribe, comment to support my work, and I see you one of the next days for another video on the Dow Jones. Have a nice day. Bye bye.